Hello, this is Jordan. This video is being recorded on the afternoon of Tuesday, May 16th, 2023. Thank you so much for joining me today. In this video, I am going to talk about gold, and specifically gold's performance against the classic investment portfolio. So we're looking at gold against the 60-40 portfolio in terms of both price and total return. The 60-40 portfolio, of course, 60% stocks, 40% bonds. And so we'll see how gold has fared against that portfolio over time and if there's any important signals coming, as the title may suggest. First thing, we have gold divided by a 60-40 portfolio over the last 100 years. So I had someone calculate some bond information. I can't recall exactly how and where I got all this data. I did have somebody help me. But this is the data for a 60-40 portfolio. I mean, gold divided by that data. And if you think about the 60-40 portfolio, we're looking at total return. So this portfolio is always making money because of in nominal terms, except for, like last year, for example, I think there was 1 year in the 70s. So for the most part, this is a portfolio that does very well historically, aside from a tiny amount of time, 1970s, very recently, a little bit of the 1930s. But my point is, there's many periods when there's a secular bull market in stocks and bonds, and you throw on top of that, specifically in the early 80s and the early 50s, you throw on top of that huge dividends from both the stock market and the bond market. I mean, the interest you were getting, unlike in the last 10 years, you were getting some real interest. So that's why you can see, if you look at what happened from 1945 to 1970, also 1980 to 2000, very bad periods for gold. And it was those bad periods were exacerbated by the fact that not only were stocks and bonds going up, but you had huge dividends at the same time. So that I'm just giving some color here on why gold, why there's such a sharp decline during secular bull markets in financial assets. Unlike in the last 10 years, you can see, I mean, it's been a secular bull for stocks and bonds, but, it really hasn't been that great. And now it's really close to ending. So you look at this ratio. First of all, the circle, I drew a circle there in 1965 because that is when the gold stocks started to outperform, when they bottomed and started to outperform this 60-40 portfolio. So if gold were not fixed, if we weren't on the gold standard, gold was freely floating, that circle is when it would have bottomed and started outperforming the 60-40 portfolio. So that's why I put that there. Now I'm looking here. We have this is monthly data. The red line is the 80-month moving average. The blue is the 40-month. So, I'm looking at the red line as a great indicator for, what's the primary trend? Is gold outperforming the 60-40? Is the primary trend up or is it down? Now, the one issue with that 60-40 is if you look at, or the one issue with the red line as a signal, that didn't give you a bull signal until it looks like 2003, so it missed the bottom by 2+ years. It also didn't give you a sell signal. If you're looking here, the sell signal came in, probably it looks like 2013. The sell signal in the 80s, that did not come until I want to say 83, 84. So that's one issue using the red line. But nevertheless, if you're looking at just historically, it doesn't give you many false signals. And so look at the two red arrows. We can see that gold rallied up against that resistance twice. It rallied up against it. This is right after COVID, probably right when gold made that peak in August or maybe a month or two before. So that is the first peak there. And then now gold has rallied up to it again. If you look at the thumbnail on the right, the last month, gold closed above it. So we're getting really close to when a point where we should see gold, at least this ratio, move significantly above the red line, and then it becomes a bull signal. And also another thing to keep an eye on is the blue line, the 40-month moving average. And if you look to the right, again, you can see the ratio. Basically in the last year, twice it rallied up to it and failed. But, after the second failure a couple of months ago, pulled back 1 month. Then in the last couple of months, it's, pushed above it. So if we get a pullback, that's something we can look for in the next couple months. Look for the pullback to come back down, successfully retest that blue line before going above the red line materially, and then you have real confirmation that this is a new secular bull market for gold and precious metals. Because look, some people would say, oh, it started in January 2016, but look, the gold against the 60-40 portfolio, it's still made lower lows after that point. So that's why you have to focus on these things in real terms. Now, next, I want to take a look at just the last chart here. And I think this is gold divided by a BlackRock 60-40 fund. So BlackRock has a bunch of 60-40 funds. This is 60% stocks, 40% bonds. And I think, of course, you will get some dividends if you invest in that fund. But I think this is only price. And this is something I'm calculating right now. I don't have all the data. I'm trying to get it. I'm basically trying to calculate gold divided by 60% stocks, 40% bonds, but not including any of the yield, any of the dividends. So we're just looking at gold price against the price of a 60-40. And I think this chart here is a potential reflection of that. And so, this is so important because we see that gold against, again, I don't mean to repeat myself, but the last chart, so this is 60-40 total return. That's why, the ratio, we're talking about gold against this is weaker because you have the dividends, the yield, et cetera. This, I think, is 60-40, but only price. So it's gold divided by that. This is why it's a stronger chart. And so you can see that gold is building out. Since 2015, 2016, it's building out a major bullish bottoming formation here. This closed at 146. You have major resistance around 160. So it only needs to rise another 9% or so. And if that happens, you're looking at, potentially, not potentially, if that happens, this could hit a 9-year high. And that would be a major breakout above this bottoming formation. So it'll be interesting to see how things transpire over the coming months. If we see another sell-off in the stock market, a big leg lower, if gold is able to hold up really well, and will gold break above this red line before it breaks above 2100? It's the same thing here. This ratio did close above the red line, but the next leg higher is, do we need to see gold break above 2100 to get a real breakout here in this? And the same goes for this. So that's where we are. Very interesting to keep an eye on this. But in terms of intermarket analysis and looking at gold against the 60-40 portfolio, the next move higher, just looking at these two ratios is hugely significant. It's massively significant. It's more evidence of confirmation that you're in a new, real secular bull market. We've come within a hair of that. We're not quite there yet, but that's something that I think we're going to see before the end of the year. So, a lot of talking for just two charts and one simple concept, gold against the 60-40. But let me know what you think in the comments. I'll talk to you guys again in the next video. Thank you for tuning in.